Dirty dealings, corporate battles, consumer woes. This is Evening 5. The government will only move on to the rationalisation of the RON95 fuel subsidy once the rollout of the targeted diesel subsidy program has been completed. Finance Minister Tu Datuk Sri Amir Hamzah Azizan said the government's priority now is the diesel subsidy and that once it's stable, it will see what else needs to be done. Amir was asked to comment on a research firm's view that the government should implement the RON95 petrol subsidy rationalisation soon to achieve its 4.1 billion savings target in the second half of 2024. Yesterday, Maybank Investment Bank wrote in a note that if the government wanted to achieve this target, the targeted RON95 petrol subsidy should start on July 1st, with the retail price raised by 32 cents per litre or 15.6%. Should this be implemented on October 1st, the price of RON95 at the pump will have to be hiked by 65 cents per litre or 31.7% to meet Putrajaya's set target by year end. The investment bank noted that ultimately the government has the final say on the actual quantum and timing of RON95 price adjustment and can even postpone the rollout. Bank Negara Malaysia Deputy Governor Adnan Zailan said the central bank is considering further measures to prop up the ringgit to ensure the local currency remains stable. Adnan said this at BNM's Sasana Symposium 2024. He also reiterated that BNM is actively engaging with corporates to bring back foreign currency funds and convert them to ringgit, and that the central bank will approve their reinvestment abroad when the time comes. Last month, Adnan said many corporates found it more expedient not to bring foreign currency balances back to avoid the approval process for reinvesting abroad, and so the central bank is working to pilot a fast-track pre-approval framework to accelerate the process. Bursa Malaysia Chairman Tan Sri Abdul Wahid Omar said at the same conference that exports in ringgit are still low compared to other currencies. He noted that about 60 to 70% of export proceeds are in the local currency and that many exporters still like to keep proceeds from sales abroad in foreign currency. The ringgit fell on February 20th to its 26-year low of 4.800 against the US dollar, a level last seen in 1998 during the peak of the Asian financial crisis. It has appreciated significantly in recent months. The listing of Johor Plantations Group on the main market of Bursa Malaysia is expected to raise 735 million, of which some 345.2 million will be raised via an offer for sale of 411 million existing shares held by its sole shareholder, Kulim Malaysia. Kulim is a wholly owned subsidiary of Johor Corp. Upon JPG's listing priced at 84 cents per share, Kulim will retain a 65% stake in JPG, while investors will hold up to 35% of the enlarged share capital. Of the 735 million raised from the exercise, about 389.8 million will be raised via a public issue of 464 million new ordinary shares in JPG. Its expected market value would be 2.1 billion ringgit. At its prospectus launch, JPG shared that 50.5% of the total proceeds to be raised from the public issue, or 196.83 million, have been earmarked for capex. This includes the construction of an integrated sustainable palm oil complex and replanting activities. 43%, or 167.44 million, will be channeled towards the repayment of bank borrowings, and the remainder will be for working capital and listing-related expenses. It aims to distribute a dividend of at least 50% of its earnings. Baostedt Heavy Industries Corp has secured a 1.1 billion ringgit contract from the Ministry of Defence for an in-service support to performance-based job for the Royal Malaysian Navy's Prime Minister class submarines. In a filing with Bursa Malaysia, BHIC said the contract was awarded to BHIC Submarine Engineering Services. It said a formal contract between the government and its subsidiary will be finalised and executed at a later date. The contract will contribute positively to the earnings of the BHIC group for the financial year ending December 31st, 2024. It added that save for Tan Sri Aziah Ali, Dr. Salehan Abang and Fahmi Ismail, who are the directors of BHIC and the unit involved, none of the directors or substantial shareholders of the company or persons connected with them has any interest, direct or indirect, in the contract. Financially, BHIC reported a net loss of 6.67 million for the first quarter of FY 2024 compared to a net loss of 6.5 million despite revenue tripling to 19.15 million ringgit. At closing bell, shares of BHIC were 1.03% lower at 48 cent, giving it a market value of 268.09 million. The Employees Provident Fund said its overall investment assets as at March 2024 grew to 1.19 trillion, with overseas investments accounting for 38% of the total. The retirement fund's overseas investments, which were mainly in equities, generated 9.88 billion or 51% of the total distributable income. According to the EPF, total distributable income in the first quarter rose 33.1% to 19.20 billion ringgit. Income from equities rose to 13.15 billion, fixed income instruments contributed 5.14 billion, real estate and infrastructure brought in 220 million, and money market instruments generated 690 million ringgit. EPF CEO Ahmad Zulkarnain said the fund is keeping an optimistic outlook for the domestic economy, while the situation is also improving for global growth. Still, risks remain high due to uncertainty surrounding the impact of monetary policy tightening on growth and financial market stability, China's property market crisis, and geopolitical tensions that could push commodity prices higher and threaten global economic growth.